both views from a bull case perspective and from a bear case perspective as to what are thoughts that analysts are putting out with regard to BHEL.
Who wants to start first?
I'll go first. I'll start off with a bear case scenario since the stock is not doing well today in trade. Now, again, if we look at BHEL in general, what the street was expecting in terms of the profitability, the revenue, it was not quite there. The margins were down, the revenue remained more or less flat, and even if you have to look again, the earnings miss was on expectations, but even gross margins. Now, despite Q4 being better in terms of the gross margins over here, 6 years of a straight decline in terms of gross margins that we are looking at, and revenues have remained flat. So this does not paint a good picture. We are seeing some supply chain issues as well.
But you have to see that Q4 gross margins were up 205 basis points on a year-on-year basis. EBITDA margins were down, yes, but this was due to a change in accounting policy. Hence, margins may not be comparable on a year-on-year basis. Furthermore, management has also stated that the company did see supply chain issues and execution delays, but going forward, it expects this to be the bottom and does see a turnaround going ahead.
I'm so glad that you brought up the execution delay point, because my second point is about the order book. Now, order book stands at about 1.3 lakh crore. This is not small. 1.1 lakh crore has been its trajectory since the last 5 years. So, if we take that and take the basic book to bill ratio, that stands about 5 times. But somehow this is not reflecting in the revenue growth that we are looking at. FY24, the revenue more or less remained flat. Even if you take last 5 years in consideration, the revenue has gone down about 5% on a CAGR basis.
I get that, but you can't deny that a 1.3 lakh crore order book is a significant potential for future revenues. Furthermore, in the Q4 con call, management did state that the company is targeting a 12 to 15% CAGR in terms of revenue. The management has also stated that the older orders of the NTPC will be executed in FY25 and the company will get cash from these commission projects in the next quarter.
Okay, so you have mentioned about the 12 to 15% of CAGR that we are looking at. But just take this into account. Order book of 1.3 lakh crore this fiscal. 1.3x of a growth over year. Even Kotak believes that such a big jump in the order book. But if you're just taking 12 to 15% of growth, that kind of looks modest. So again, your execution over here remains on a watch out. Why is this still a concern going forward for the business? And this has been the problem in the past as well.
Okay, but the old legacy projects are showing signs of execution pickup and expect completion by FY25. Furthermore, Nuvama has also revised its FY26 EPS estimates higher by 7% given the execution of the low OPM legacy orders.
So low OPM orders, higher order book, NTPC, again, long gestation orders. Now, despite you are seeing that there's some going to be slow orders which will, be on a better trajectory going forward, but the long gestation orders cannot offset these slow orders going forward. Again, what was a concern for the business was its vendor base. So they have faced challenges with their vendors. So even if they are to improve their vendor trajectory going forward, the concern remains on improving their vendors, getting better at execution, but on the other hand, compromising their margins. So it's again a battle between your profitability, which they're already struggling with, or the execution, again, an area they're already struggling with.
But that could be a short-term picture. You have to look at the long-term picture. Now, the government is planning to add 88 gigawatts of thermal capacity by 2032, due to which that the company is expecting 10 to 12 gigawatts of orders from the government itself. Furthermore, Nuvama has also stated that the total addressable market for the thermal space is at 25 gigawatts over FY25-26 versus just 9.6 gigawatts in FY24, which could help the company gain more market share. Furthermore, let's not forget the defense order book outlook and its potential. The sector is not only booming, but also has a government push, and the company has already submitted certain bids to the army regarding air defense guns, as well as for the marine gas turbines to the Navy.
Okay, this I have to agree with you. The defense is very strong. even the order trajectory you've given remains on a quite strong levels. But again, what is my concern over here is the current order book concentration in the power sector. About 65% of our mix is still in the power sector. So even if you want to take defense and the industry sector in general, there is still a long-term plan for this going forward over here. And let's not forget about the valuations that the company has. Quite expensive, 371 of a PE multiple, which is comparing it with the recent rally, it has over like 280% of a jump in the stock price. Again, the picture is about valuations versus the stock rally that we've already seen.
Yes.
Okay, very interesting views coming in.
Who won?
I guess you should decide that. I wanted to ask you for your views on this one.
Today the bear wins without a shadow of a doubt, no matter how strong the bull view was.